Let's take this small case study to understand consignment accounting from the point of view of consigner, that is in the books of consigner. We have A sent goods costing 50,000 to B on 1st July 2011. So who is consigner here? A is the consigner. Who is consignee? B is the consignee. What is the value of goods he is sending? It is 50,000. When he is sending? On 1st July. And there is also additional information, and spent rupees 1000 on packing. So A, apart from sending goods, he also incurred 1000 on packing. On 3rd July 2011, B received the goods. So transit time was 2 days. B sent his acceptance to A. Let me just complete for 30,000, for rupees 30,000, that was missing here. So B sent his acceptance to A for 30,000. It means balance he should pay. Then we have B spent, some typo was here. Yeah. B spent 2000 on freight and carriage. Then again B spent 500 on godown rent, 300 on insurance. On 31st December 2011, B sent his account sales along with account due to A, showing that 4/5 of the goods have been sold for 55,000. B is entitled to commission for 10%. One of the customer have become insolvent and the value of that customer is 600. So in this backdrop, we have to prepare consignment account in the books of consigner. It is not in the question, so let me write in the books of consigner. In the books of consigner. Okay, it means we have to open a few accounts. What are the accounts we should open? Number one, we should open consignment account. Number one, we should open consignment account, basically to know what is the consignment profit. Then we should open consignee account to know what is the amount ultimately receivable from consignee. And this is a problem where you have some credit transactions, because you understand that one of the customer have become insolvent. That 600 is nothing but bad debts. It means you are selling on credit. The question is not giving you information whether the sales are on cash or credit. Since you encounter a bad debts, let us assume that this entire sales of 55,000 is on credit. Okay, it means we should also prepare what is known as consignment debtors account. Right, we should also prepare what is known as consignment debtors account. So let's have the structure. So let's have the structure of consignment account, basically the ledger with debit, credit and all. Then consignee account and consignment debtors account. So let's go one by one. A sent goods costing 50,000 to B on 1st July. So if you recollect, the entry will be consignment account debit to goods sent on consignment, right? So consignment account should be debited. Let's write. And what is the date? The date of the transaction is 1st July. So we'll write on 1st July 2011. Transaction is happening on 1st July 2011. What is the entry? Two goods sent on consignment. Two goods sent on consignment. What is the value? It is 50,000. The value of goods sent on consignment, is it 50,000? Yes, it is 50,000. Then we have another information that apart from sending goods, Mr. A also spent rupees 1000 on packing. So this is the money which he spent for consignment purpose. So this should be debited to consignment and cash is going out. So the credit will go to cash. So we'll say to cash, because this is the amount spent by consignor and it is 1000. Then we have on 3rd July 2011, B received the goods. So this is the transaction where there will not be any accounting entry, okay? Because B is not purchasing. B is just acting as an agent, so he'll not pass an entry. But we have B sent his acceptance to A for 30,000. So what is the value of goods he received? It is 50,000. So he had sent acceptance. Okay. Now even before he started selling the goods, he had given the acceptance. Okay. It means a bill has come, that is bills receivable, that should be debited, and the credit should go to consignee because there is no due from him as of now, because there is no sales that are taking place. Okay, so for this transaction, entry will be like this: bills receivable which had come, that should be debited, and credit should go to consignee account. In this case, it is B. Okay, so we have to go to consignee account and credit that account by this 30,000. So let's do that. We have here consignee account, and who is consignee? B, right? So here on credit we'll say buy bills receivable, and what is the value? It is 30,000. So we have addressed that transaction. Next, B spent 2,000 on freight and carriage. That's what we have here. B spent 2,000 on freight and carriage. So this money was spent by B on behalf of A. It means it is an expense on consignment, and that should be paid to Mr. B. So it's an expense on consignment, so consignment account should be debited, and since it is payable to B, B's account should be credited. So let's go to consignment account. On the debit, we'll say to B account. And what is the value? We know the value is 2000. Now understand, here we have cash spent by consignor 1000, cash spent by consignee 2000. That is, this 3000 is spent by both the people on the goods which are sent on consignment. Okay, so these costs are actually associated with the goods, and they are incurred to bring the goods to the present location, because A incurred cash of 1000 to send the goods, and B incurred cash of 2000 to receive the goods. Okay, so they are basically, if I put it, they are non-selling expenses, right? They are non-selling expenses, and this will be very important when we try to find out the value of stock. Next, we have B spent rupees 500 on godown rent and 300 on insurance. It is, it's an expense from consignment point of view, and it is payable to B, and total amount is 500 plus 300, that is 800. So let's go and record that in consignment account to B account. What is the amount? 800. Now there are two credits to B account. It means we should recognize this credit in B account. So let's go to consignee account, B account. On the credit, we'll say by consignment, because it is coming from consignment account, right? By consignment account, one is 2000 and the other one is by consignment, the other one is 800. Fine. What else we have? On 31st December 2011, B sent his account sales along with the amount that is due to A. And in that, what is saying? 4/5 of the goods have been sold for 55,000. So now there is a sale. But we have to understand it is going to be considered as credit sale. So if it is credit sale, the debit will go to consignment debtors and credit will go to consignment account. Okay, so what we'll do? We'll go to consignment account and we'll say by consignment debtors. By consignment debtors account, what is the value? 55,000. It means your consignment debtors should be debited now on account of consignment by 55,000. So let's do that. Let's go to consignment debtors account and we'll say to consignment account, what is the value? 55,000. So we have taken care of consignment now. I mean, the consignment sale aspect is addressed, but this entire 55,000 is not going to come. So let us not credit consignee immediately because we have to see whether there is any default. So let's go back and see. We have another additional information, that is B is entitled to commission of 10% on sales. Sales is 55,000. 10% will work out to 5,500, and that is an expense as far as consignment is concerned. So we'll write in consignment, okay, to B account, and this is 55,000 multiplied by 10%, that is 5,500. So this is payable to consignee. So let's go to consignee account and we'll credit this also by consignment. What is the amount? It is 5,500. So we have covered that as well. Then we have last item. One of the customer have become insolvent and the value is 600. So this will bring down the value of consignment debtors. Okay, it means consignment debtors will be created and bad debts have to be debited. So whenever we have a nominal item, what we'll do? We will replace that nominal item with consignment. Let me just explain that. If you notice here, we have a bad debts of 600. So bad debts is a loss. So ideally, that entry that comes to our mind is bad debts account debit to debtors account. Bad debts account debit to debtors account. And I told you that all nominal items should be replaced with consignment. Now, instead of bad debts, what we are going to have in this place is consignment account. That is, consignment account will be debited and debtors will be created by 600. So let's do that. Let us go to consignment account first. In consignment account, we'll say to consignment debtors. We'll say to consignment debtors. What is the value? It is 600. And we'll go to consignment debtors account, right? In consignment debtors account, we have to provide for this loss by consignment account. How much? 600. Now follow closely. The amount that is receivable from consignment debtors is 55,000. Okay, of which 600 is not going to be realized. It means balance 54,400 will be realized. Okay, and who is responsible for this responsibility? Vests with consignee. That is, consignee would have received this 54,400. We are not going to pass that cash receipt entry, rather we'll directly debit it to consignee. So we'll say by consignee account 54,400. So let me total and close this account. It is 55,000 both sides. So now I am closing this account. It means now I should go to consignee account. On debit, I have to say to consignment debtors 54,400. So let me do that. To consignment debtors, it is 54,400. Okay. So now it's time for us to balance or close this account to know what will be the amount that will be sent to consigner and it's also time for us to close this consignment account. Okay, so first let's try to close consignment account. Let's try to find out what is the profit or loss position. But here you have a problem. I mean, you cannot simply compare the credit and debit, find the difference, because you have not sold everything. Why? If you notice the question says only 4/5 of the goods have been sold. It means 1/5 of the goods are still with consignee. So you should know what is the value of those goods, and that should be credited in consignment account, right? For that, let us have one detailed working. So I'm going to call it as working note 1. Working note 1, computation of value of consignment stock. Computation of value of consignment stock. Now, how will find the value of this consignment stock? Basically, the basic cost plus the cost which are incurred till the point where the stock has been taken, or the cost incurred in bringing the stock to the present location. Let me repeat that. The cost incurred in bringing the stock to the present location. So all those costs can be considered. Now, how to find out what is the value of stock or the basic cost of the stock that are still with consignee? What is the value of goods that are sent by consignor? We know the value of goods that are sent by consignor is 50,000, right? So the value of goods is 50,000. So let me write that. Value, or I'll say cost. More than value, I'll say cost. Cost of goods sent by consignor, how much is equal to 50,000. Now, what is the value of the goods still remaining unsold? Is 1/5 of this. So cost of unsold stock, and that is nothing but, in calculation I can say it is A multiplied by 1/5. Okay, that is 50,000 into 1 by 5, and it is going to be 10,000. So this is the basic cost, but on this cost certain expenses have been incurred. That is, some cash has been spent by consignor, then something has been spent by consignee also. But in that we have to see what are selling expenses, what are non-selling expenses. Because we can consider only non-selling expenses, selling expenses cannot be considered. So if you go back to the question, the 2000 on freight and carriage is non-selling, whereas this 500 and 300 are selling. It means we can say yes to this 2000, but we have to say no to this 800. We can say yes to this 1000. Okay, it means we can consider the cash expenses of consignor and consignee provided they are non-selling expenses. So let me add item C, add non-selling expenses incurred by consignor, and we know its value, it is 1000. But this 1000 is for total goods, so we cannot take this 1000 in its entirety. That is, this 1000 is for total goods. Now we are concerned only about the goods that are not sold. So it is only 1/5 of the goods which are remaining unsold. So 1000 multiplied by 1 by 5, we get the value as 200. So only 200 should be considered as non-selling expenses incurred by consignor attributable to stock. Similarly, we should also add non-selling expenses by consignee. by consignee, and if you notice, consignee has incurred 2000 plus 800, but what we are going to consider is only 2000. So on this 2000, we have to consider 1/5 because 1/5 worth of stock is still remaining unsold. So 2000 multiplied by 1 by 5 value is 400. So now let us total all the three. If we total this, we'll get the value as 10,600. So 10,600 is the value of closing stock. So now we'll go to consignment account. In consignment account, on credit, we'll write buy consignment stock. Buy consignment stock, and it is as per working note 1. Okay, it is 10,600. It is 10,600. Fine. So now let's do the totaling and we'll try to find out what is the profit. It appears on credit side we have higher value. So if I total credit side, I should be getting something like 65,600. Right. Now let me write the total over here also, 65,600. So this will throw some difference on debit side. On debit side, we have items like goods sent on consignment. We have cash incurred by consignor, 2000 plus 800 by consignee, 5500 by again consignee, then 600 on account of bad debts. It means there is going to be a balancing figure of 5700. So this is the profit from consignment, and this should be transferred to general P&L account. To general P&L account, it is 5700. Okay, so in this way we have completed consignment account, but we are yet to close consignee account. What is the amount that we can expect from consignee? See, the amount what we can expect from consignee is based on consignment debtors and various expenses. We have already closed consignment debtors. Sales was 55,000, but there was a bad debts of 600. So what ultimately consignee received is only 54,400. So this 54,400 is what receivable from consignee, but he can adjust this 30,000 because already he had given a bill, so that will be honored separately. Then he spent 2000, that has to be adjusted. He spent 8,000 or 800, that should be adjusted. He is entitled for a commission of 5,500. It means we can expect only the balance money from consignee. So let us total and find the difference. On the debit side, we have 54,400 higher value. So let's write both sides 54,400. So we'll have difference. We'll have difference, and that is what the money we are going to get from consignee. So we'll write buy cash account, and that's going to be the difference. And let me calculate. The difference works out to 16,100. So this is the money which is ultimately recoverable from consignee.